Benchmarks and broader markets fall for the third day in a row. Sectoral indices closed mixed. Nifty FinServ top, lagging sectoral index. HDFC Bank continues to fall, loses over 38,000 crore rupees in market cap. All eyes on our RIL's third quarter earnings as analysts expect net profit and revenue to grow despite the pressure on operating numbers. HUL expected to see a muted third quarter, higher outlay towards ad spending to cap the EBITDA margin expansion. Akasa Air places an order for 150 Boeing Max jets. Average order value likely to be at $17.5 billion. Akasa's total order book now stands at 226 aircrafts. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As usual, before we delve deep into the show, let's take a quick look at how the markets fared during the day. My colleague Mahima joins in with all the market action.
Right, Pragati, so as you rightly mentioned at the start of the show, the benchmarks and broader markets both have fallen third day in a row now. If we talk about the Nifty, the top laggards were LTI Mindtree, NTPC and HDFC Bank. If we talk about top gainers, Sun Pharma, Cipla and Tech Mahindra led the rally. Nifty closes nearly 200 points above the day's lows, and Sensex also falls for third day in a row, and Sensex closes over 500 points above day's lows. Nifty Bank also falls for third day in a row. HDFC Bank, AU and SFB are the top laggards in the Nifty Bank today. Also, if we talk about the sectoral indices, they have mixed cues. Nifty Pharma was the top gaining sector today. It broke a two-day losing streak, and Aurobindo Pharma, Sun Pharma were top gainers on the Nifty Pharma today. Nifty FinServ was the top lagging sectoral index, where IEX, ICICI Prudential were the top laggards on Nifty FinServ. If we talk about the advanced decline ratio, 20 advanced, 28 decline, and 2 remain unchanged. So overall, it was not a very good day for the markets.
Right, Mahima, thanks so much for giving us that quick market check. Now, in the stock market, overpromise and underperformance often gets punished. Now, and that's what has been said, not in absolute words, but that's what has been implied by Kotak Mahindra AMC's Nilesh Shah when asked about HDFC Bank's sharp fall in the market post its Q3 earnings announcement, and effectively dragging the Bank Nifty also in red. And that's also on the screen, the performance of HDFC Bank and how it has fared in the market. Now, here is a chunk of the chat for you.
In the stock market, overpromise and under-delivery invariably gets punished. Under-promise and over-delivery invariably gets rewarded. For stocks as well as the market, we'll have to remember that we are trading at premium valuation to most peer group. There is expectations that our earnings growth will be superior and will deliver somewhere between 15 to 20% compounded profit growth as a market. Any undelivery over there, low delivery over there will have its consequences.
That was Nilesh Shah for you on HDFC Bank. Now, Mukesh Ambani's RIL is all set to come out with its third quarter earnings tomorrow. And for the company, net profit and revenue is expected to be higher, even though there is some pressure on the operating numbers. My colleague Vikas Srivastav joins in with what's expected ahead of the Q3 numbers.
Reliance Industries' third quarter operational performance is likely to be impacted by a weak performance from the O2C segment. The O2C segment constitutes mostly the refining business and the petrochemical business. In the third quarter, the gross refining margin is lower by almost $2 per barrel. So in the previous quarter, it was around $9.9 per barrel, which has come down to almost $7.9 per barrel, according to analyst estimates tracked by Bloomberg. Now, this is likely to be offset by a strong performance in margins by petrochemical business. The petrochemical margins are seen at almost rupees 191 per ton compared to 193 per ton compared to 191 per ton in the previous quarter. As far as the net profit and the revenue figures are concerned, the net profit and revenue are likely to do well in the third quarter on the back of very strong performance from the retail and the RGO business. The RGO business has done extremely well on the back of strong footfall, on the back of strong ARPU, that is average revenue per user, and also very good subscriber additions in the third quarter. As far as the retail business is concerned, the retail business has done well on the back of strong footfalls, because the third quarter is also the seasons, like festival seasons quarter. So that has helped boost the revenue. Revenue is likely, the revenue from operations for the consolidated business is likely to be higher to almost 2.54 lakh crores this quarter compared to 2.34 lakh crore in the previous quarter. The net profit is also seen to be higher by almost 4% to 18,080 crores in the third quarter.
That was a quick review for you. And after RIL, we have another company that will be announcing its earnings soon. HUL is expected to come out with its Q3 numbers tomorrow. My colleague Sesa Sen joins us with the preview on the company's Q3 numbers.
Yeah, hi Pragati. So, well, yes, it is going to be another quarter of muted earnings growth for HUL. No material uptick in festive demand and price cuts being taken across categories are likely to weigh on the volume as well as the revenue growth for HUL. Now, analysts are expecting a volume growth of 2 to 3% over the previous year, while the revenue growth is expected to remain flat. Volume growth, we must remember, is also likely to be impacted as the company faces stiff competition from small and regional players. We need to watch if HUL's market share has further eroded sequentially. Now, in terms of margins, HUL is likely to see an expansion in gross margins as prices of key raw materials like palm oil, tea, and coffee has declined year on year as well as over the previous quarter. However, the company is increasing advertising and offering extra incentives to channels to remain competitive with regional brands. Now, this might lead to a moderate EBITDA margin expansion. If we look at the three segments where HUL operates, the home care category is likely to see a moderate sales growth of 0.5% due to the price cuts taken in the laundry portfolio. Beauty and personal care segment is also likely to see a moderate 0.8% year-on-year growth owing to price cuts in soaps. However, the food and refreshment business is likely to drive the growth, growing by 3.5% year-on-year. So HUL's outlook on competition from local and regional players as well as the rural versus urban demand will be the key monitorables tomorrow.
Thanks so much for giving us that quick update, Sesa. A slew of telecom companies will also be sharing their Q3 earnings very soon. Revenues are expected to rise for the sector. We have my colleague Smriti joining us with a preview on the telecom sector's earnings.
Right, Pragati, you rightly mentioned revenue is likely to grow in this quarter. This will be on the back of subscriber additions that happen. However, margins are likely to remain capped after 5G capex by Bharti and Jio specifically, because there are only two players who are putting money into capex. And I'll come specifically to the companies now. Bharti Airtel, the revenue growth is expected to be around 3.5%. Margins are expected to remain flat, as I said, on the back of 5G capex that the company has done. Net profit is likely to go up 36%. On the other hand, we have Vodafone Idea, which has been facing troubles. There has been no news of fundraise as of now. Its revenue is likely to grow at around 1.5-2%. Margin is likely to contract, so they're losing operational efficiency as well. Net loss, however, will contract as compared to the previous quarter, where we saw an expansion in the net loss happening. Now, for Reliance Jio, subscriber growth is expected to be elevated with at least 1 crore additions in this quarter itself. ARPU growth for this quarter is likely to remain flattish as well because of the 5G capex that has been done. But tomorrow we'll have Jio results and we'll see what comes out.
Right, Smriti, thanks so much for bringing us that quick wrap on the telecom earnings. Moving on to the pharma space, and we have a quick update from there. Sun Pharma has entered into a definitive merger agreement with Taro Pharma. It is to acquire the remaining outstanding shares of Taro for $280 891 crore rupees. The price has been revised from $38 per share to $43 per share. And that's the quick update we had for you from the pharma space. Now, my colleague Janani also spoke to DGFT Santosh Sarangi about the details of the new Trade Connect e-platform and the need for it in the current time.
The need for it arises out of our interaction with stakeholders in various parts of the country, where many of the young and aspiring exporters struggle with the what, where and how of exports. So what kind of products, which market do they send it to, and how do they do it? So on this, they have been struggling for quite some time. So we are initiating this effort to launch a Trade Connect e-platform, which will provide a one-stop solution to the exporters on understanding the kind of products which they export, the kind of markets which they should send it to, and in addition, understanding the tariff regulatory barrier, understanding what kind of FTA benefits are available for these exports, understanding what kind of events and exhibitions should they attend to promote the kind of products which they want to. So this will be a one-stop solution, and this will also take on board different government departments and line ministers along with the exporters. So this will also provide them a platform to reach out to Indian missions, to reach out to other government departments which are related with this. So this is supposed to be an integrative platform which will join many dots which are concerned with exports.
So as I understand, this is the phase one of this. This is envisions to be more ambitious. What will be the next stage, and when can we see phase one roll out?
Phase one's first few modules will roll out in next 2 to 3 months, and the entire rollout will happen over a period of time. Phase 2 will start after about a year's time.
That was the update from the DGFT. Now, Akasa Air, a big newsmaker during the day, definitely. The company has placed an order for 150 Boeing Max jets. According to the information that is available with us, Boeing is the company that has won this order. Now, Akasa Air has started flying commercially less than 2 years ago, and this has made a firm purchase with this latest transaction. It is a firm purchase for the 737 MAX 10 and MAX 8 200 planes, and they will be given through 2032. Now, the announcement of this deal was made at the Wings India Air Show in Hyderabad. According to Bloomberg, Akasa's total order book now stands at 226 aircrafts. Currently, the airline operates a fleet of 22 MAX jets. Now, let's slip into a short break, but we have lots more lined up for you on the other side as well, so stay tuned. Welcome back. You're watching The Reporter on NDTV Profit. Now, the troubled fintech firm Zest Money, which announced its shutdown plans last month, has now been acquired by DMI Finance, the NBFC arm of DMI. We have a colleague joining in with more on this.
The troubled Zest Money has finally been acquired. This is a distressed sale or a fire sale that has definitely come at a much lower valuation. Zest Money, though the terms of the deal haven't been disclosed by either of the entities, it is definitely much lesser than the $450 million valuation that Zest Money once commanded. But what the companies have revealed is that DMI Finance will be the preferred lender on the Zest Money platform, as well as it will continue to have all the exclusive rights to all the Zest brands that exist. So what this points to is that Zest Money as an entity and as a brand will probably continue to exist, which is different from what we were expecting in terms of a total shutdown. What has also not been clarified is what will happen to the employees that Zest Money has. It has about 150 to 200 employees that are based in Bangalore currently. DMI will also add Zest Money's checkout financing platform to its platform, and DMI had been about a partner with Zest Money for about 8 years.
Thanks so much for that update, Rish. Now, AGS Energy Storage Solutions, which is a wholly owned subsidiary of Tata Sons, is in talks with a group of banks to raise as much as $500 million via green loans. And this information we are getting as per Bloomberg. The company is into making battery cells with factories in India and the UK. Its facilities are also to be powered by clean energy. Now, AGS would use the proceeds from the loan for its factories, with the tenor likely to be more than 5 years. And that's all the information that we have coming right from Bloomberg. In a surprise development, the Delhi High Court has informed cricketer Mahendra Singh Dhoni about the defamation case that has been filed against him. Now, with the matter scheduled for hearing on 19 January, we have our colleague Charu joining in with more on this.
Hi, Pragati. So it is a very interesting case. Years back, around in 2017, a contract was finalized between Mahendra Singh Dhoni and another company to make global sports complexes, Mahendra Singh Dhoni sports complexes, and then suddenly the contract was revoked through a third party with the help of an email. But since it was not done directly and was done through an email, the other party definitely thought that in legal terms they can think that it is not yet revoked and not yet cancelled, and that is why a legal dispute took place, after which Mahendra Singh Dhoni himself started some legal proceedings in Jharkhand, filed a complaint against the company, against the sports complex company, and said that they are basically trying to run sports complexes with his name without his permission, even though the contract has been revoked. And then his counsel, some time back, conducted a press release without any decision in that complaint. And as a response to that complaint, now proceedings have been initiated in the Delhi High Court. Party is saying, the sports complex party is saying that without any result in the complaint in Jharkhand, how could a press release and how could these statements be made against the sports complex company? And Mahendra Singh Dhoni is not the only party against which these proceedings have been initiated. The proceedings have been initiated against several other parties, including several news portals and several social networking sites as well. And today the Delhi High Court said that Mahendra Singh Dhoni himself needs to be in the loop of the matter and asked the parties to basically notify him through email and other methods. And because of that, the matter has been adjourned for now and will pick up in the later half of this month, and we'll know more about it then.
Right, Charu, thanks so much for bringing us that update. Indeed, a very interesting case. Now, Ajmera Realty has entered into a JV or a joint venture with Rustomji for the redevelopment projects in Mumbai. My colleague Saloni joins in with more on this.
Right, Pragati, as you mentioned, Ajmera Realty has signed a joint venture, partnership with Rustom Ji, Keystone Realtors and other listed players. So on back of the news, the stock actually jumped as much as 17% as both the companies will hold 50% stake in the project. But the main reason for the stock reaction was that the project is aiming to have an estimated gross development value of rupees 760 crore. Definitely giving the fact that Ajmera is obviously going to expand a lot in the redevelopment segment, especially being a Mumbai-based firm where redevelopment is something that builders kind of try to opportunize from. The stock is up about 30% in January as compared to 9% rise in Nifty Realty. So just to give a context as to why it's been one of the outperformers in the realty spaces, because even in terms of their operational highlights that they shared earlier this month, they mentioned that they have you've doubled their sales value during the quarter, as well as collections have been up about 30%, and they have also been very confident of achieving their guidance for the year. So lots of things happening, as far as Ajmera Realty is concerned, and very interesting stock to watch out for as well.
Thanks so much for bringing us that update. Now, let's move straight to an update from Davos. My colleague Neeraj Shah spoke to the Vice Chairman and MD of Apollo Tyres at the World Economic Forum at Davos. Now, they both talked about the MD's perspective on India's growth and are people really keen on making investments in India. Here's a look at it for you.
Well, it's been pretty neutral, I would say. But yeah, India is on the growth path, as we all know. 6.5 to 7% is our growth GDP. So India is booming, as we can see on the promenade. All states are well represented, and there is a lot of inflow of funds coming into India. I can see that. There's a lot of excitement about India because other world economies are going through recessions, inflationary issues, geopolitical issues, whereas I think the government under the Prime Minister is being very proactive and have taken very good, positive, proactive steps for the Indian consumers, for the India infrastructure, which is now playing out. And we are seeing that on the road also.
Okay, so not just as the head honcho of Apollo Tyres, but as somebody who's a part of various bodies in India and Davos, what have been conversations like? Are people keen to make investments into India or other economies at a point of time when the world growth seems to be tapering off?
Well, I think it's a bit cautious. People are waiting and watching. One of the big themes that's going on around here is AI, and you would have also seen that. And a lot of artificial intelligence, machine learning, what is generative artificial intelligence, how that is going to help your businesses, how that is also going to help governments and economies to scale up. A lot of data centers coming around. So that's, I guess, the new buzz that's going around in Davos this year.
Yeah, of course, for a tire company, not necessarily everything around it, but adapting to that will also be important. But also, just tell us about how do you envisage 2024 to be?
Well, particularly in AI, we've been doing this for the past 3 years now.
Okay.
So we have 2 tech innovation hubs, one in Hyderabad and one in London, where there are data scientists sitting. We are now on the cloud, so all our data is real time. We have 7 plants across India and Europe. So all data is coming in from the cloud. Data scientists are analyzing it through artificial intelligence, understanding equipment. So for example, in our plant in Hungary, we've been able to increase our productivity by nearly 12%, just through data mining, understanding data, and by increasing productivity. So very less inflow of CapEx, which is what we are doing for the next 2 years. We're going CapEx light, and we are putting a lot of emphasis on digitalization and trying to see how we can improve our balance sheet ratios. Our ROCE is now gone up to 15 to 16% from a sub 10. That's all thanks to all the digital activities that we're doing. And more we'll keep on investing in this. So right now it's only gone into manufacturing. The next step is to take it into supply chain, take it into sales and marketing, and understand consumer behavior through artificial intelligence.
Right, that was the update from Davos. Now we have Ind Bank's third quarter numbers also out, a very important bank indeed. And the numbers, as we can see, and what we have in front of us as of now is that the net interest income is up 17.8% year on year. So not really a sharp rise, but largely meeting the estimates of analysts as they had seen it doing. The net interest income is at 502.95 crore rupees. The net profit is up 17.2%. Now, not a sharp rise in either net interest income or net profit, but pretty decent set of numbers, largely in line with the analyst estimates. The GNPAs and the net NPAs, if we look at the asset quality, looks largely pristine, or we can call it flat as well, because the gross NPAs are at 1.92% versus the 1.93% on a quarterly basis. So flat numbers. Net NPA again at 0.57% versus 0.57% in the last quarter. So asset quality is largely the same. The NII, net profit are not very sharp rises, 17.8, 17.2% roughly. Now, in the last quarter, when the company's management was addressing media in the press conference, they said that the growth outlook for the third quarter was remaining, they were seeing it to be reasonably strong on the back of festive demand, especially driving growth in cars. So, as we have the breakup on those numbers, we will bring you those latest updates, because very soon we also have Ind Bank's press conference starting in. So, as and when we have more details on what are these growth drivers, what is the outlook going ahead in the fourth quarter, we will bring you those updates. That was what we had from Ind Bank in terms of numbers, and that's also that we have for you on The Reporter. But for more news and updates, please keep watching NDTV Profit.